Hi everyone, I'm Matt from Looking to Bitcoin, and today we're going to be covering the reserve risk chart and how we can use this tool to help improve your Bitcoin investing and analysis. This chart, as well as many others, are all freely available on lookintobitcoin.com, your number one source for Bitcoin information. If you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So, the reserve risk chart is actually one of the more complex charts we have on lookintobitcoin.com, and as you can probably immediately see, there's a lot of things happening on the chart that may make this tool seem a little daunting at first, but we can break it down step by step so it seems a little bit more simple. So on this Look into Bitcoin chart here, we can actually scroll down and see the formula behind calculating all of this. Because if we just look at the chart here, we can see the reserve risk is the Bitcoin price divided by the HODL bank, but the HODL bank, who knows what that is? We'll figure that out. So if we scroll down beneath the chart, we can actually see all of the metrics that are required to calculate the HODL bank. And we'll go through them one by one. So the first is the Bitcoin days destroyed. And we actually have a chart representing the Bitcoin days destroyed, or coin days destroyed, whichever you'd prefer to call it. And this is the total amount of days a Bitcoin has been sat in a wallet before it is transacted, multiplied by the quantity of that Bitcoin. So that might sound a little confusing, but for example, if I held one Bitcoin in my wallet for 10 days and then sent it to another wallet, I would add 10 Bitcoin days destroyed, or coin days destroyed, which we have a chart for on Look into Bitcoin, which is useful in its own right, but we'll just stick to the one for today, reserve risk. So then we also, from that, need to calculate the adjusted Bitcoin days destroyed. Now that is the Bitcoin days destroyed divided by the circulating supply of Bitcoin at that time. So fairly simple. The total supply of Bitcoin that there will ever be is 21 million, but this is changing every 10 minutes or so. The amount of total Bitcoin changes. So if at any point we want to calculate the adjusted Bitcoin days destroyed, we look at the Bitcoin days destroyed and divide it by the current circulating supply of Bitcoin at that moment in time. We can then take the value of coin days destroyed, which is taking the adjusted Bitcoin days destroyed metric and multiplying that by the current price of Bitcoin. And then we can actually collate all of that value of coin days destroyed data to give us the value of coin days destroyed metric. And then the last thing we need is the median value of coin days destroyed, which is taking this value of coin days destroyed, which is the daily Bitcoin price, multiplied by the adjusted Bitcoin days destroyed, collating all of that data, and then if we take a 30-day median average of that, so just a 30-day average of that value, we get the median value of coin days destroyed. So we're almost there. Once we have the median value of coin days destroyed, we can actually chart that as you see here. And this is the red line you see, and the black line is the underlying price of Bitcoin. And this difference we have between the median value of coin days destroyed and the actual price of Bitcoin, we can refer to that as the opportunity cost. We'll cover that a bit more in a second, but for now, we'll just say that is the opportunity cost. And if we every single day take the value of this opportunity cost and again aggregate that, we get what is known as the HODL bank. So if we just scroll back up to the chart here, you can see as we're adding up this opportunity cost every single day, we can see it equates to this HODL bank value. And then the reserve risk is just dividing the Bitcoin price by the HODL bank. And finally, we have our reserve risk metric here, which is presented in a nice oscillator, which is a little bit simpler to understand. So back to the previous point, why do we refer to the difference between the median value of coin days destroyed and the Bitcoin price as the opportunity cost? So as this is taking into account the willingness of a Bitcoin investor to part ways with their coins, and especially as this is weighted more towards those Bitcoin investors that have a large amount of Bitcoin that have been holding for an especially long period of time, we can say if they're willing to part ways with their Bitcoin, maybe the market is becoming a little bit overheated, especially as these with huge amounts of Bitcoin that have been held for an extended period of time may have a bit more experience and expertise when it comes to timing the market. When this value increases substantially, this median value of coin days destroyed, and especially as it increases above the actual underlying price of Bitcoin, this means that a lot of long-term investors, a lot of large long-term investors are willing to sell their Bitcoin because they think that this is a great area to take profit. Whereas when this value decreases substantially beneath the Bitcoin price, this shows that these long-term larger holders or anyone holding Bitcoin isn't necessarily willing to part ways with their Bitcoin. They're under the impression that in the future they can get a higher price and are willing to hold on for that future returns. So what we can actually see, if we actually look at the HODL bank here, it looks like it's increasing forever. But if we just isolate one bull cycle peak, such as this 2017 one here, we can see the HODL bank actually decreases when this blue line, this median value of coin days destroyed, surpasses the Bitcoin price. So this is a great area to actually consider taking some profit on your Bitcoin, or if you just look at the reserve risk oscillator we have here, that as well gives a decent idea of where we may be within a market cycle. So why should you consider using this chart? Well, right now we're actually at the lowest reserve risk value ever. So what is this telling us? Not only is Bitcoin potentially overvalued, but a lot of investors aren't actually willing to part ways with their Bitcoin at these prices. Recently, we have actually seen a spike in this median value of Coindays Destroyed, this blue line here, in the aftermath of the FTX fallout. But right now it's decreasing a little bit again. But what we can see is every single bear cycle we've had where Bitcoin has entered this green buy zone for the reserve risk metric, it has historically always been a great area to consider accumulating BTC. Now, of course, you don't have to necessarily use just these green areas we have on the chart here as buy zones and the red area as sell zones. As you can see, we didn't actually reach the sell zone in the previous bull cycle we had. But what we can actually observe is that during every single bull cycle, the peak of this reserve risk is actually decreasing at a fairly predictable rate. And not only are the peaks decreasing, but the bottoms are decreasing also. Now, this is probably due to the fact that Bitcoin investors are more and more willing with every single cycle to hold onto the Bitcoin for an extended period of time. And then if you also take into account the number of Bitcoins that have lost or in wallets that cannot be accessed, the circulating supply of Bitcoin that is willing to be sold at any given point is usually on a downward trend. So right now, I think is a good opportunity to look into using the reserve risk for your Bitcoin investing and analysis. So, just to summarize, reserve risk is one of the more complex charts we have here at Look Into Bitcoin, but simply put, it is looking at the confidence in Bitcoin's futures from the perspective of Bitcoin holders. If they're not willing to part ways with Bitcoin at certain prices, they're probably confident that prices will be higher in the future. Whereas if you see Bitcoin holders that have been holding for an extended period of time, especially those with large stacks willing to sell, this may indicate that they do not have the utmost of confidence that they can get even better prices in the future. And by analyzing this relationship of Bitcoin holders, opportunity cost, and the underlying price, we can see when long-term holders are not willing to part ways with their Bitcoin, even at lower prices, it has historically provided a great high reward to risk opportunity for strategic investors. And of course, one thing we have to acknowledge is right now reserve risk is currently at its lowest value ever, potentially providing the risk-adjusted opportunity of a lifetime for cryptocurrency investors. If you like this video, then please visit lookintobitcoin.com. We know Bitcoin data analytics can be complicated. We will want to help you understand the key principles to optimize your Bitcoin investing and analysis. Well, I try my best anyway. Don't forget to like and subscribe to the channel to learn about all our other charts and gain even more market insights. Thank you very much for watching, and I'll see you in the next one.